Well, all right. Friday it is. Looks like we got, this is a good one here for those of you who hadn't seen this before. When you see, we had a closing mark here at around 154. Well, let's see what the actual close was. Maybe it'll tell us here. Click on it. Yeah, so it closed at 153.97. We've got a huge gap up here. Now you have a choice, and it's really a personal choice. I mean, you can either use a trailing stop. If you're not familiar with what that is, basically you're putting an amount just below what the prevailing price is right now to try to make a little bit more profit, or you just take the money. That looks like about, what, almost $9. $9 move to the upside. Myself, I take the money. I'm always looking for another opportunity. I mean, if it opens at 164, that's a good profit on, it's just, I think we only have a couple, let's see, PPG. Yeah, you only have the one, so, you're going to make at least $10, right, off I don't know what that percentage would be, but we'll we'll wait and see and work it out, see how much of a percentage gain that you make on that one move. But this is a good one to watch. There's a lot of people that will try to short this right off the bat. So you're playing against these guys. So it'll probably be driven down, but then you'll see this big green bar here because this is a weekly. So these type of things happen, but if you're not in the game, you don't have an opportunity to hit these, right? So a lot of people are always chasing this. It just, this is one of these lucky occurrences. It's earnings week. I don't know what happened here. If it goes up, it goes up. I mean, $10 higher, that's pretty substantial. So it either had really good earnings. You got to understand too, you got dividends coming up, I think in May. I have to go back and look. But that's a good one to watch, just from the perspective, yeah, like May 7th. So a lot of people that are shorting it, they don't want to be in it very long. So it's going to have a lot of volatility on the open. Well, let's go to some of the others. You got Pfizer. Looks like it's going to open up a little bit higher. We don't know if it's going to hit that or not. We still have a half hour, 27 minutes to go before the market actually opens, so we'll see what happens. Other than that, it doesn't look like there's too much else going on. We are in earnings, and most of it's financial stocks and things. So one thing that, in my opinion, that drives markets is oil. We've always been hinged on oil. People want to say that we're getting away from it. I don't believe it because it's used in everything. It's just not gasoline. I mean, it's in every product that you use. It's never going away. So if you see oil prices low, over the years, I've always kind of correlated that to how well the economy's doing. And it's never really steered me wrong. It's had some bumps here and there, but I have an idea of where the economy is, so I don't have to really listen to anything. All I have to do is look at any type of stocks that I'm holding that are oil related. Let's see, where have I got one of those? Probably on this account here. BP, it's been down. British Petroleum, it's just an oil stock, doesn't matter which one it is. CVX, Chevron. You look, charts don't explain anything to me. All I look at is price. If it's high, economy's doing good. If it's low, economy's not doing so good. It's a supply and demand issue. That's all it is. If there's more productivity, more oil is needed to produce the items that we're using. I mean, they're not making this stuff out of thin air. And I mean, if they were just using wood, take a look at lumber. homes are becoming really expensive because wood is up. I don't know what the percentage was, but or lumber in particular is just ridiculous. Go down to your Home Depot, try to buy a piece of plywood, blow your mind. It's like, think about how many sheets go into a home build. So all of that stuff really doesn't matter unless you're, buying commodities and things, or you can correlate your stocks. You can do that if you want to. But I look at numbers. I'm not really too concerned. If you know something is going out of business, like if it was a horse and carriage or horse and buggy or whatever, I probably wouldn't be investing in that. Why? Because they're not selling any of them, right? They're not making any dividends, so it doesn't make any difference. Why would I even look at it? Because it wouldn't make any sense. It doesn't pay dividends to me. I'm not interested. We got some positives here, but until it actually opens, I don't trust any of these numbers. The one that looks interesting though is that PPG. That's let's go back to the mosaic and see if we still got it there. Yeah, so it's still floating around, but I would assume with a big jump up there, and if you go back over here and look at the spread on it, this can tell you a lot. Where is it? Yeah, 163.50 to 164.95. That's well above the 155.15. That's why I'm just going to sit. Like, it's, whatever it sells for, that's what I'm taking it off. I was looking to get 1.3% out of it on $152. Well, it's going to be much higher than that. Let's just say we get it for $9.53. And see, we wanted 2, so let's just subtract that. So that's, we'll just add 9.53, get us a minus the 216, 737 divided by 152. So we're going to make, basically, multiply that by 100, 4.8%, 5% on our money. So that's about 5 times as much as we normally would. You got to keep in mind, this is the full amount for a year's worth of dividends. So we're breaking this down into micro segments so people understand that this is just a scaling issue. This is all you have to remember when you start looking at your account size. You're like, okay, so if I had over, let's just say you were 164,000, now you'd be doing 20% of max shares. So you just double that amount. So if it's going to be a $10 profit, now maybe it's a $20 profit. I'm just using round numbers. But this is how you have to look at your ability to make money in the market. You have to do it on scale. There's many different ways to do it, but we don't want to lose any money. We want to keep going forward. So we're not going to have those big winners, right? Like, this is nice, And as your account size grows, you start to see these more and more. And we're at a top, or you're at a bottom. You don't really see too much of this going on. I'm talking the overall market, not the individual stocks. But every once in a while, you get a good earnings report or something, and you get that kind of move. So I don't want to harp on it too much because it's really a small piece of the whole pie. What we're looking for is any type of, interesting movement. So we got this MPC. This was bought this week. Looks like it's almost halfway to the promised land. So just looking to get 4.4% out of that move. Don't see too much else. It's always quiet before, Fridays. This is going to be quick. Should be over by 10 o'clock. You got about basically an hour to look over your stuff. If you're at work and you can't look at these things live, the best thing to do is have your orders in place, right? If you're sitting on your phone and you're like, hey, I just got an alert, price alert, because you use alerts. It says, hey, we're up, $8. Now you have that opportunity to either just take the profit, leave your sell limit in there, or you can change it to a trailing stop and put it in for any amount that you want, just no less than what you're originally going to take. My problem with doing that, I don't put a trailing stop in until a couple minutes before, because I want to see if it's actually going to end up that way. You know, a couple minutes, I mean, down to the minute, 30 seconds, whatever, until I click that button, because you just never know. Something can change in the market. Now you got a trailing stop in. It can work against you. So I just like taking a profit. I mean, what's the difference? You're talking, you know, you can turn that money around that much faster. But if you got the idea that PPG's going to, you know, $300, and you know, that's that FOMO working there. Take your profit, move on. It's just another occurrence. Make as many occurrences as you can. All right, I'm going to put that up and see if this thing's going to move around at all. Just doesn't want to sit still. Shoot, it's up 11 bucks now. A lot of activity going on there. This is, let's take a look. Matter of fact, let's go to see if there's any time and sales on this. Oh yeah, yeah. You can see. Look at the size of the volume is ramping up, right? The sizes aren't that big. 100, 246. Well, that's substantial. I mean, 116, $1,600, right? Or let's see here. That's 116,400, right? So you got a couple of those going down there. So these are bigger players right here. So at this point, you had 100 shares of, this is cumulative here, okay, 5,000. See, the spread was a substantial spread. You got to watch these spreads when you're buying too. So somebody here doesn't care what the spread is, and well, they got it at the bid. You can see there, 163.50. So they didn't overpay for it. So that was obviously a limit order. You can decipher these after you look at them for a while. Here's another one. See, this guy paid the ask. So he paid an additional, just to add, well, subtract a $1.46. So he paid $146 for that trade. Unbelievable. Why would you do that? It was probably, I don't know why somebody would do that. I don't know if that's a misprint or not. That doesn't make any sense why somebody would pay that. Oh, well, wait a second. Yeah, that doesn't make any sense why somebody would pay that $1.46, but they did. So you come across here, look at all these hundreds. A lot of money being put in there, right? And everybody got it at 164. A lot of people had the same idea. Look at that, 164, right? So there's a lot of shares for sale out there, because to fill this, to buy this, they had to, this is a sell here, right? These are buys. That's a buy. That's a sell. Buy. Green. You get the idea. What's this say here? Always looking at these conditions. Yeah. So 164. It seems like that's a popular price, 164. So it just gives you an idea what's actually going on in the market. This is pre-market now. This is not live. Okay, pre-market people are buying pretty good sums, you know. And I would say maybe institutions, you know, or the bigger, smaller investor. I'll be right back. I got to get a coffee, and you need to stop. All right. So it looks like we got a pretty good dividend payments today. Looks like 54.33. We'll take a look. Hey, pup's gonna get out of control here. Sorry, I'm eating a cookie. Oatmeal with frosting. They're always good. You can see the market overall this week was pretty flat. We had a decent day yesterday because earnings shot up a few of the positions that we had. But remember, if you're not involved in them, how are you going to, people wait till the last second and say, okay, I'll buy it now. Well, it's already made its move. If you're in, you can take advantage of it. If it goes against you, you just buy more of them. That's easy. Of course, we don't know what's going to happen. We don't have access to this stuff. And I don't listen to the gurus out there because they don't know. Nobody has access to those files. No, well, you got about 11 minutes. PPG still doing its thing. And the trick is going to be when this market comes down is how are people going to react? What are you going to do? Are you going to sit on your positions and collect dividends, or are you going to get scared? You're going to jump ship. If you get scared and you take a loss, it takes you a long time to build back up. Dividends help soften that blow on the way down, right? That way it doesn't seem like you're losing as much. And if the market stay, it's possible the market could stay down for 5 years. And, if you bought it, which, and so you bought it up here and the market's way down here. It'll take you a long time to make dividends up on this one particular stock because it's only paying, which one is this, JPM? On the wrong chart here. JPM. Right, so it's only paying 2.3%. Well, it comes down here, it's going to take you a long time to come back up here to get that average cost down. So what's the next best thing? You have to DCA it, right? Well, if you're buying 100 shares up here, it's going to cost you 15 grand. So if you have to DCA it, it's going to cost you another 12 grand. So you're already up to close to $30,000. And if you're going to do it again, you don't have any money because your account's, $30,000. So this is why people jump ship. Because all of a sudden, they realize they don't have any money to invest anymore. And now they're collecting 2.3%. Actually, it will be a little higher because as price comes down, your yield goes up. But the dividend amount stays the same. Now, it can fluctuate. Yes, it could go up. Yes, it could go down. But if you had 100 shares, you're making $360 a year, right? If you had 200, $720. That softens the blow, but how many shares are you going to be able to buy down here? You can buy 7, right? If it's 100, if you got 720. Well, in this case, I can buy 1 and buy another one here, right? And now I can buy another one down here. And then I can just wait on the scan. So if I dollar cost average, I'll be here. If I buy another one down here, I'll probably be pretty close to the even. If it buys down here on this green 0%, it's a lot easier for me to catch back up once my average cost is down here, and I still don't have a ton of money in the market. Now, let me show you a good example of how this works out. I can find it. There you go. PFE. That's an example. Looks almost exactly the same. Bought up high, middle, and down at the bottom. Now it's coming back up. Do I know if it's going to hit that? No. But instead of my average cost being, or my profit target being up here, or my average cost being up here, now it's down here. The only difference is price, right? So we have 15 shares, so it's 5, right? 46, 10% on each trade. 10% of max shares is 5. We had 3 trades, 15. We're coming back up. If we hit it, great. If not, we're collecting dividends. Looks like it's going to pay on May 6th, another 39 cents. I don't care if it hits it or not. Doesn't matter. It's making money. If it hits it, take the cash, move on to the next one. It comes back up on the scan, we buy it. It's that simple. But you gotta let the market come to you. But if you're buying stuff that's going out of business because you think somebody's going to buy it, there's a reason why it's going out of business. If stock prices are going down, that's not always the most opportune time to buy. You want to buy stuff when there's interest in the companies and when they're making money. Hence, they're paying dividends. I don't trust growth stocks only because they can turn on a dime, and they do. I mean, we've seen it over the last couple of months. You know, you can call it anything that doesn't pay dividends is, in my mind, a growth stock. You can debate me on that. I don't care. That's just the way I look at them. That's why I don't touch them. I don't buy what do you call it, Amazon. I don't buy Tesla. You know, I've traded Tesla in the past, just when it first came out, but I was like, well, it's getting too expensive. It doesn't pay me any dividends. I don't want to trap my money in it. You know, who cares if it splits? I mean, if I had 1,000 shares and now it was 2,000 shares, that'd be great, right? But you know, you have to put that money. You got to have some type of crystal ball to know where it's going. I don't have any idea where it's going, and if you believe the numbers, believe the numbers. The people that are making money off of that are the people that have the big money. Just look at the price of the stock now. And you got in early and you're sitting on it. I mean, at some time you have to take profit, or you hadn't made anything. You know, if you had 1,000 shares and you buy it at $10, you hadn't sold it, you hadn't made nothing yet. So I'm waiting for it to go where? You don't take profit, you hadn't made any money. None of these positions have made money yet, except for dividends, right? Because they're in the portfolio, they're making money. Until you click on that button and realize that gain, it hasn't made you any money. Quit thinking that it does. I hear this all the time. People today, man, I'm up 50%. I was like, well, how much have you sold? Nothing. Well, you're not up anything. It's unrealized. And they, you know, they'll argue with me. And I was like, okay, well, we'll see what happens. I said, you just hold on to it. You know, I'm not telling you what to do. I'm just saying, look at it for what it is. I mean, take half at least, you know, do something. Take some profit and get it in your cash account, because if it comes down, it goes away. You know, if you got $10 million in Coke and you're retired, all you have to do is collect that dividend. You don't have to do anything. You don't care where the price goes. It can go up, it can go down. Doesn't matter. You're still going to get paid your dividend. 3.5%, 4%, whatever it is. I don't even know what Coke pays anymore. All I know is Warren Buffett makes $150 million a quarter. Think about that. Off of one stock. Of course, he's got 400 million shares, but that's what he makes. The power of the dividends. All right, so we'll watch this on the open and see if everything spikes. I'm not concerned about the other one because we know it's going to profit. I'm not actually concerned about Pfizer either, but it's interesting that, what was the other one? J&J, that got paused or halted or whatever, and this one just took off on that news. I mean, that's just the way people think, you know. It's like, oh, they're going to make more money. It's like, okay, whatever. I didn't buy Pfizer because of what they do. I buy it because it came up on my scan. I don't really care what they do. Financial stocks are opening quite a bit higher. 3 up, 4. Ooh, this one's moving quick here. Got some interest in this one. That's PNC Financial Services.
Waterfield.
Yep, there we go. So we sold Maine. That's a CEF. I know that. What else did we sell? Right on the opening. So Maine, 992. That's from yesterday. Must have been on this other account. Oh, he had 2 mains, so let's multiply that by 2. CEF should be your main focus if you're new to this, mainly because the yields are higher. And if you have a small account and you're not used to it, you want to get that income coming in consistently. These show up on scans quite often, and there's quite a few of them. So you can see that we're out. I'll just clean up these charts for the next occurrence. Okay, so we sold Pfizer. Now you see, I'm not running around here like a chicken with my head cut off trying to figure out what to buy, what to sell. It's already happening. It's already predetermined. I know exactly where I'm going to take my profits. And this is the way you need to be thinking. You don't need to be like, oh my God, what am I going to buy? What am I going to do? Okay, so Pfizer, $24.85. That's just simple math. Make sure we haven't got anything else. Sometimes you get orders at the same time and a little voice there talks over itself. So let's go to Pfizer. Okay, so we're going to copy this. I got to send this over to, okay, we sold another one. It'll be a decent Friday. So Pfizer, yes, and DFS, let's Discover Financial Services. It's got to be on this one here. You see, when you're looking at a whole bunch of different accounts, like I said, it's only $1.78 because it's a low paying. Look at $103 for this, but because it shows up on the scan, I play by the rules, right? So DFS, because for whatever reason it just didn't pay, or max shares are only 13. I can only, on this size account, I can only buy 1. Now, if it was 15, I could buy 2. We'll take a picture of that. Just another occurrence.
Order filled.
Okay, we sold CBT. We'll go over to CBT. It's got to be on one of these other ones. Well, hold on a second. Let me look at I'm trying to write some of this stuff down so I can annotate stuff correctly. And then back over to this chart. Now I still have a bunch of other accounts that I have to go through, but because this is automatic, it doesn't really matter when it's selling. It's when I'm buying I have to really work. So that's 427. I'll go to the chart. Dang, there's PPG. That took a while to fill. And then EMN. Sold EMN, PPG. EMN 563. And let's get out of there, go back over to this one, back and forth. So we made 1485 on PPG. All right, so you can tell when they're in the blue, they're winners, right? We don't put reds up here. Why? Because we don't sell for losses. When we buy something, we buy it for life. That's the attitude you have to take with it, because it's paying you dividends. You don't know when this is going to turn around. You don't know, you want to be in to collect. If you keep this attitude, you won't make stupid decisions by saying, okay, well, I'm going to make a YOLO play here. I'm going to take $60,000. I'm going to buy this because I think it's good. Or somebody told you, you know, or you had a feeling, or the stars were aligned, or, you know, some newfangled gadget you found on your indicators. Does play by the rules, and I promise you. Oh, sold another one, EMR. Kind of a interesting Friday. 404. So this all adds up. Think about Walmart and a can of beans. Dang. You don't normally see this fast orders on a Friday, especially. A lot of money coming in. And there's Met. Let's see what that looks like. See, I said no one knows where this is going. That was probably last week or something. So I just clean up the chart, get it off of there. Okay, and what did we make on that one? Oh, I need to find Met. 583. Okay, the system works. And I mean, we're looking at 315 days without a loss. So anybody that wants to challenge me on it, I got proof. You know, but I'm not there to brag or anything else. I've been doing this so many years. It's not exciting, it's boring, but it pays the bills, which if you don't have any bills, it's great. If you're looking to do this for a living, you better make sure you're debt free. Because it's, if you haven't got a lot, like if you had 250,000 at 10%, you can make 25 grand a year. No, that's no problem. I mean, these accounts make, well, let's see, this is a combined 120, so it's going to make a minimum of 12 grand, right? So, and all the other accounts that I manage, you just add it up. I mean, this isn't rocket science. Once you find something that works, you'll figure it out, and then you'll start thinking differently about your monies in your accounts and how you're investing your money. You won't be taking long shots. You'll be like, hey, I like that pot. I like to have somebody paying me rent every month, and I look at each stock as rent. Hey, maybe some pays more than the others, right? And sometimes, like, you know, I get tired of trading. You know, it's like, hey, I want to take a week off. You can. You just you won't be buying anything. You just be selling. That's it. You just be taking profit. Your account, your portfolio will shrink. You won't have as many positions. Like we just took off 1, 2, 3, 4, 5, 6, 7, 8, 9 positions. I haven't put a long position on this week. I think one. I have to go back and look, but maybe one long position. Well, we can just look at your trade log and see. Yeah, okay, 1, 2. April 14th, I had 2, right? MPC and PSX. Let's check on this account. None on that account. This account, 3. PKO, well, that was last week. Was that last week? Right, what's today? Okay, yeah, on the 12th. Yeah, so that was Monday. Monday we had 3. You forget because you trade so much and you get too many different accounts, it's hard to keep track. The whole idea is, though, we're not taking any losses, so how is this a bad thing? People all the time say, how can you make any money? You're only making $1.86. You're making $3.55. You're making... Okay. Why don't you think outside the box and think long-term? Investing is a long-term thing. Problem most people have is their long-term investing horizon is next week. They want to have that money, you know, doubled, tripled, quadrupled. They want $1 million by next week, you know, and that sounds like somebody buying lottery tickets, right? It's not going to happen. Fast money it's a fantasy. It's a mirage. There's some people that do get lucky, you know, but if you can prove to me that they've got some kind of system that's repeatable, then I'll listen. But I'd never seen it in 30 years. And I'm not looking for it. I mean, I played the game when I was younger. Why not, you know? It's just money. You're just going to throw it away anyways. You're going to drink it. You're going to party it up, whatever. But when you start thinking about, how can I make money consistently? It's not by rolling the dice. Casino will tell you that. That's why so many people think the stock market's a casino, because they treat it like one. I'm going to throw that $1,000 down on this one. Man, PPG took off, didn't it? Let's take a look at that chart. 17. Man, let's get this off of here. Yeah, I got to take a picture of this one because somebody told me they would fade it. Oh, shit. That's funny. I already saved that, did I? Yeah, okay. I got to put that one up on Twitter. Yeah, I'll worry about that later. It's too funny. But yeah, a decent Friday. I doubt we'll see any longs. Well, let me go over, since it is Friday, we can go over this is what the scan looks like from, week to week. This week was light. I think a couple weeks back we had close to 140 on the scan. This week, you get things like all, which is all state. ALX, I'm not sure what that is, but it's too high for the size of these portfolios, because this counts under 100,000. You cannot invest in them. They're too risky because of the value and some other factors that go into it. ATO, we've had that in our account before. All of these we've seen before. It's just a different extreme. Some of them show up more than others because it's just market volatility, supply and demand. Everybody knows what McDonald's is. Let's take a look at that. Let's see. I bet you if we didn't pick it up, it's because the price went up. Obvious, right? And that goes for anything. If you see anything highlighted, we probably own it. MCY, I know that was sold earlier in the week. Pretty sure it was. Let's take a look. MCY. Yeah, it's no longer there. It's probably on a different account though. MMD. Now this is a CEF, so we picked that up, right? And you can see where we bought it, right? We bought it right on the close of Friday. We want into those as fast as possible because they pay monthly dividends. And that's a good thing, These don't move much, but if you had max shares, which is, let me get rid of this line up here, it's always confusing. Max shares on this position is about 160, because you can see 16, so it'd be like 160 as max shares. Well, you can look right here. What does it say? 160, right there. So you keep that stuff in mind when you're making your decisions, looking at the scan. Once you understand how to manage your money, the scans are invaluable. I mean, because all you have to do is say, okay, this is how many shares I'm going to buy based on the size of my account, and this is the yield or the dividend amount I'm going to get. Now, NHF, right? It's below our $1.20 standard per year per share. But the reason why we acquire it is because it's a CEF. It pays monthly. It doesn't matter. Now, of course, your target price is only 60 cents away. So your chances are better that you're just going to close it out for a year and still make your 5.2%. So you have to look at these for what they are. When I put this algorithm together to search this out, I wanted the best possible probabilities of hitting, and some of them don't work out. Okay, they're not it's not foolproof. It's not 100%, but it's way past the 50% mark. Everything that we invest in makes money. Okay, doesn't matter because you're getting paid dividends. If it stops paying dividends, guess what? We don't buy any more of it. It's plain and simple. So there's PKO. That's a good dividend payment per month. 19. If we can get it, well, this one's only max shares of 8, right? Because of the price and some other factors that go into it. But how is that? Well, I don't know what that 8's doing on there. It's not right. It's supposed to be, let me get that off of there. I don't even know why that's on there. Remove this commentary. So PKO is 116, so that's why we have 12. We just bought it, right? And then, let's see, PII. I don't think we own that. It's Polaris, yeah. So you can see the difference, right? $138, and you can only buy 1 share. Well, it didn't come back to where we could buy it, so we weren't interested in it. It just kind of went up from there, and that's fine. We don't care. We just don't want to be put in a position where we're going to lose money. So Yum, take a look at that. It just went up. Right. Well, we're not afraid of buying up here, as long as the scan tells us there's a reason for doing it. Okay, you say up here. All I look at is this number. You can take all of this stuff right here, right, from here and here back. Everything to the left of this, I don't care about. It's meaningless to me. All it does is serve as a purpose as far as using our Fibonacci, and I use that word loosely. I just use it as a tool. If we bought it up here, whatever the average price is, that's the top of my Fibonacci. I don't care. It doesn't matter to me what term you use. If you want to say a 50% pullback tool, you can use that too. Fibonacci, people put a lot of faith in it, and that's fine. If you use it consistently, I'm sure it'll probably work. And there's people that swear by it. I'm just not one of them. I've used all kinds of different indicators over the years. They've all become useless to me. I'm sure that in some capacity they work on some stock with the right conditions. Maybe you use it in conjunction with 5 other indicators and it works great for you. Well, hey, keep doing what you're doing. But it all comes down to money management in the end. I'm sorry to say, I mean, you got to have money to make money. And the only way you're going to do that is if you don't lose money. So work within your means, and when the market finally does rebalance and comes down, or we go to a great reset or whatever else, man, the opportunities are going to be great for the people that understand how to manage money. But the people that are throwing money around right now that or not taking profits, that think this is just going to go on forever, and it may very well be, but if you still don't take a profit, you never realize it. But that's what's behind a lot of options trading and futures trading. Is what do? They take quick profits, but they also take quick losses. So we're willing to be patient, and I haven't even added up what happened today, but let's do a quick tally. So we had 2 of those. And 24.85, 178, 427, 14.85, 163, 404 and 583. So we made 81.09 in trading profits today. And that's after commissions. The commissions have already been factored. You can look and see on our statements the true gain at the end of the month. I put out a short video on how to look at them, realized and unrealized gains, and how not to get fooled by, you know, just an upward movement in your account, because unless you take profits, it's just unrealized. I'm just like astounded at how high PPG is going here. Yeah, nuts. Yeah, we got about 9 minutes left, so I don't know what else. If anybody's got a question, I'll go through a couple of these others. Once you get the idea down, then all of a sudden you'll have this moment of calm come over you. And if you've been struggling at all with what do you call it, like, you know, your future money, your earnings and stuff like that, just think of this as like a part-time job that, you know, is going to increase over time, because if you get what you put into it, right? Money, time. I mean, I'm not saying sit in front of your computer all day long, because obviously if you're if you don't make any money in a day because you're sitting there watching the screen and nothing's selling, and you know you're not buying anything, I mean, it's just wasted time, wasn't it? But you can add it up. If you put like a half hour in per day just checking your account, and let's say you make $100 in the week, right? I'm just using round numbers. Let's say it's 5 hours total, so you made 20 bucks an hour. That's just one way to look at it. And the people that are telling you, oh man, you can't make any money long term like that, don't let them fool you, man. They don't know what they're talking about. Buffett started with $1,000 when he first started trading in the market. Of course, he brought on 100,000 of other people's money, but it doesn't take long. You know, once you get to that 100,000 mark, you should be well versed on what dividend stocks are and which ones to invest in and how to manage your money. All I'm doing is showing you, I'm showing you how to manage money more than anything else here. Picking the stocks is basically the easy part, because you've narrowed it down to those companies that are making money. If you can go in depth as much as you want, you know, I'm just saying, you don't have to spend all that time. The company's not making money, it's not paying dividends. And the companies that aren't paying dividends, we call them speculative or growth stocks. When they're going down, that money is idle. None of these are idle. They're all making, let's break it down. If you're getting paid 16 cents, well, just a month. Let's just do it on a year. Well, you get the idea. If you're getting $365 in dividends a year, that would be, what, $1 a day? So you can break it down into pennies if you want to. Then you just start multiplying it by the number of shares you have. Simplify it, you know, because once the numbers get big, if you haven't got a good grasp of how to manage it at the low end, you can forget it on the high end. You'll make so many mistakes it'll make your head spin, you know. And double check your stuff. It's like, you know, woodworking. You know, if you're going to measure something, measure it twice, cut once. Don't just assume that you put an order in for 3 when you may have put it in for 30. You know, trust me, I've done it. And I have to go back in there, and I won't take a loss. I'm stubborn, you know. I'm like, oh, I guess I'm just going to hold those 30 shares, and I'm supposed to only have 3, and I wait for it to go up a penny, or probably a little bit more than that, so I don't take a loss with the commission, and sell out the 27 and get out. You know, as long as I'm even or make a buck or whatever, I'm out. I need that money somewhere else. I am risk averse. I will never put more money in on each trade, right? That's important. Each trade's its own occurrence. So once you get up to max shares, you can't trade it anymore, right? If it holds steady there, great. But if it goes over let's say you're over the max shares, and the max shares actually show up on the account, and you're above that green line, you got to sell the difference. Doesn't matter how much the profit is, as long as it's profitable, you sell the difference and bring it back in line with your risk profile. But yeah, bank stocks. Yep. But that was the flurry this morning. Kind of a mixed bag of a whole bunch of different stuff. Could be, who knows the reasons, you know. Do I care? No. It just seems to happen by itself. Huh? It's magic. Do I know something? Nope. Don't know squat. I have no idea where the markets are going. Don't care. And I listen to people, right? Like I know a lot of people have. This market's coming down. You're sitting on the sidelines with all your money. Eventually it's going to come down, but in the meantime, what am I doing? Every day that goes by, I make money, regardless if I sell something or not. There's dividends being paid. So right now, on today, we're looking at close to, well, just over $135, bringing it in. That's not bad. I mean, we're coming up on 10 o'clock. It's only been a half an hour. You know, the dividends pay, you know, they're paid at different times of the month. So because you have so many different things, you can look into them as much as you want, try to figure out. There's so many different strategies. If you have a strategy that you want some help with, just give me a shout. I've probably done it in the past. That's the beauty of, you know, teaching people. It's like, hey, I want to see people succeed, and I hear and see so many people failing, and you're just like, oh my God, I mean, who are you listening to? And then, you know, they finally come clean and tell you, it's like, yeah, it's pretty bad advice you've been getting. But in the end, I mean, it's up to you. You know, you have to want it. If you haven't got any patience, this game is not for you, because that's when it becomes a casino. Think Warren Buffett. Just think about what this guy does. You know, I don't know if he's still got a 2005 Cadillac. You know, he lives in the same house. I mean, one of the richest guys in the world. And he still goes and gets his coffee and his Egg McMuffin in the morning, and then goes into work. Probably has some of the same old suits. He doesn't care. I mean, you get to the point, you know, your dividends are going to outmake what you can make. If you have a $500,000 portfolio at 10%, and you don't think it's possible, but I'm showing people you can do 1% per month. That's 12% per year with 100,000. So it's not how much you have, it's how you manage it. Now in the down market, just cut it in half. If it's crashing, all I'm doing is pulling in dividends, whatever this account. This one's 5.81, right? What's this other one? It's 8.07. This is constantly fluctuating. The market's going down, don't be fooled, because this number is going to go high, right? You're still making what it was at the higher end. And this one's 9.47. That's pretty good return just for sitting on dividends. You know, it can crash tomorrow. I don't care. And stuff comes back up on the scan, I'm back in. You might have to wait a little while. I guess next time it comes down, it's probably going to be down a while. But see, people will get complacent and they sit back and, you know, like, well, when it comes back down, it's like, well, when's it going to come down? You don't know. Sure. I mean, you can be unrealizing losses all the way down, right? But if you don't sell any of it, you never lose it. Well, one thing that keeps coming in is the dividend, and then You got all that extra money sitting on the side. Right now, we're sitting on a bunch of cash. $19,000 in just this one account, right? And this is a small account, right? And people say, well, you could be making another 10% on your money. I was like, that's true. But what did I just take out of the market? I took out a full year's worth of dividends at 10% on 19,000. We just made that today. Okay, $185 is just short of 10% of 19. Well, 19. Yeah, 1900. 1900. So it'd be 19,000. So yeah, 1%. There again, there's the 1% coming in. Think a little smaller, and these numbers will start to add up quick. Everybody wants that 100% return, and it's just too far away. I'm not saying it can't happen, but in the meantime, it just takes too long. If you're looking for something to double in value, like, I mean, here's 6 months, and we have from, what's the low here, 26 to 30. If I said to myself, okay, I'm going to buy here at this low, and you got it exactly, you have to go to 52.43. And what's happened in the meantime? If you're buying the dividend paying stock, right, you're collecting all these dividends. You could just stay in it, right? But you're only making, what's DFP paying? You're making 6.4 on your money. Nothing wrong with that. I don't have any problem with that strategy. But if you think it's going to 52, how long is it going to take you to get there? I'm trying to hit this dividend amount before the year's out. Now, if we bought it right back here, that's less than, what, 12? So 4 months. If it comes up and smacks that, I got it in 4 months. What about all these others that we just sold? Maine, I think we bought that last week. We got a full year's worth of dividends for the amount that we invested. Now, it's not on the chart. We can probably look at the, well, it's a 7-day. Yeah, I don't see it on there. But you can see we consistently do this every week. Almost for, okay, 315 days. I hadn't been on this YouTube for, what, since February. But I can back it up. I can show you and just keep showing people on a day-to-day basis how to do this. And once you get it, you don't have to look at this stuff anymore. Here's a position, and people saying, oh, well, you're losing money here. I say, well, you have to understand what a rights offering is too. They're offering me, I can buy more shares, right, because I own shares. On a rights offering, they can give me 3 shares for every one that I'd like to purchase. Now, they haven't come out and said exactly how many, but it could be 2 to 1. It's definitely not going to be 1 to 1. But if they say, well, we'll give you 3 shares for every dollar that you put in, or for every share that you want to buy, we'll give you 3. So this amount could skyrocket, and basically what I would do is 172 is the max shares. So I would take that difference and say, okay, well, this is how many I want to buy. Still keeping within my risk profile. So then it makes this a wash. Now this profit and loss goes to 0, right? Unrealized, of course, but it brings my average cost down, and then I can move my target sell limit down. A little bit more advanced. People, look at it and like, what are you doing? It's like, you got to learn it. It's not just, punch a button and money comes rolling in. That's what everybody wants. They go on black box systems, All right, well, it's Friday. It's probably going to be pretty dead for the rest of the day, but I got stuff to do. Yeah, is that chart like off the side? Yeah, you guys can hardly even see that sucker. That's probably better. Anyways, I hope you learned something from this. Have a great day. Happy trading.